So how long exactly would it take to become financially independent and retire early using Fidelity Index Funds? What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video we are talking about how to become financially independent and retire early, also known as the FIRE movement, using Fidelity Index Funds. Now, this video comes on the heels of talking about this same type of strategy with dividend stocks and with Vanguard index funds. And we talked a little bit about the differences between using dividend stocks versus using index funds and how we have a different strategy for how we withdraw funds and how long that money lasts. But I got a lot of feedback that said, hey, I want to see this with Fidelity Index Funds, and some of you even said with Schwab, so we'll take a look at that in a future video. In this video, I'm going to share with you the spreadsheet that I created just for Fidelity Index Funds. We're going to look at how much money it would take to invest on a monthly basis, given your salary, how much you want to invest based as a percentage of your income. We'll also take into account how much money you think you will need to live on every single month, and then we'll be able to spit out a specific date in the future that we can actually retire early and be financially independent, aka live off of our own money. These spreadsheets and these videos do take a few hours to put together, so if you appreciate that, if you find some value from this video, hit that like button, hit the subscribe button, and let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comments. All right, you guys know how much I value your time, and I never want to waste it. I want to deliver massive value every time I make a video, so without further delay, let's jump right into the spreadsheet. All right, guys, so we have the FIRE Community Dividend video for Fidelity Index Funds here. As you can see, we've got that Fidelity logo on here, and the same type of familiar setup as in the previous videos here. We've got annual income, percentage of income invested, this, and then the monthly investment here would be dictated based off this percentage and this income here. We've got the desired monthly cash flow. This is how much you expect to have in the future. We've got a starting balance here if you are starting with any type of investment balance. We've got today's month. Then we've got the desired FIRE date here, when we would like to retire. And then we've got the monthly cash flow here, how much we would have in monthly cash flow based off of that desired FIRE date and the withdrawal rate. We'll get to that in a second. We've got the monthly cash flow, we've got the total balance here, and then we've got the FIRE date achieved, yes or no, which just figures out whether or not the monthly cash flow here is sufficient to meet our monthly cash flow here. And then our withdrawal rate, and I mentioned in previous videos here, the general safe rate is 4% here. This video is not meant to discuss or determine whether or not a 4% withdrawal rate is safe or not, because there are other factors to consider, notwithstanding sequence of returns and how that could dramatically impact whether or not 4% is sufficient. So if you're more conservative, you could utilize 3.5% here. If you're more aggressive, 4.5%. But generally, we're just gonna stick with 4% here. Now that's the FIRE dashboard. Then we've got the dashboard here with the underlying investments, and I wanted to stop and talk to you here. And I'm only using, what, 1, 2, 3, 4, 5, 6 different Fidelity Index Funds here. And you might be thinking, holy smokes, Joe, there's a ton of index funds that Fidelity has. You're right. Here's the problem. Most of the index funds with Fidelity have not been open for at least 10 years. We've got Fidelity Zero funds that have been open less than 3 years. We've got other funds that have been only open 5 or 6 or 7 years. And it would be wrong of me, I feel, to present these index funds for you and their abnormal growth rates or their total returns over the past 3, 5, or 7 years, when the truth is we've been in a historic bull market, and we should not be expecting that our investments will grow at the rate that they have over the past 10 years. So all of these funds have at least 10 years of history that we can look back on. If you want to get an idea of what other investments would grow at, especially small cap, mid cap, and large cap growth funds, you can look at the Vanguard fund. I've got some investments in that spreadsheet in that video that have at least 15 years, and so you can combine those. Generally, you're gonna see very similar growth rates between Vanguard and Fidelity's funds with their small, mid, and large cap funds. So if you wanna get an idea of what those types of funds would do, take a look at the Vanguard video, or if you're part of the Patreon community, you have access to this spreadsheet, and you have access to the Vanguard spreadsheet and the dividend stock spreadsheet. As part of being in the Patreon community, you can take a look at those and get an idea of what that would look like. By the way, if you're interested in the Patreon community, there's a link in the description below. There's tons of extra content you can have, and including all of the spreadsheets I use in my videos. So in this video, we are utilizing, like I said, 6 different index funds for Fidelity. We've got the Fidelity NASDAQ Composite Index Fund, the Fidelity 500 Index Fund, the Fidelity Total Market Index Fund, the Fidelity Extended Market Index Fund, the Fidelity 4-in-1 Index Fund, and the Fidelity International Index Fund here. We've got the respective prices, the current dividend yield, the portfolio weighting, expense ratio, annual dividend, and the holding value based on this portfolio weighting and including the FIRE date here. And all the data is here for you guys. All of the price data here and the dividend data for all these funds in case you want to take a look at the underlying data that I used, which I got from Yahoo Finance, by the way. All right, so let's go ahead and take a look at this. Let's test drive it and see what we got here. Let's start with a very average Joe type of annual income. Let's go ahead and say one person, we'll say $50,000 per year. And let's say, well, we probably can't invest 45%. Let's say we're investing 33% of our income here, 1/3. That would equate to a monthly investment of $1,375. Now let's talk about how much money we'd like to have, how much we would need to have in order to live off of our investments. So let's change our desired monthly income here to whatever we're living off of here. So let's say 66% of $50,000 here. So we'll say 0.66 times 50,000. Would be $33,000 divided by 12 is $2,750. Change this to $2,750. And let's say we are starting with no money in an investment account. We'll change this up in future scenarios, but let's just say we're starting with $0. This first run here, let's say we're investing all of our money, 100% of it into the Fidelity Total Market Index Fund here. Okay, let's go back over here. And let's change our desired FIRE date. Let's say we want to do it in 15 years. And let's say we want to try and retire in 12 years. We'll say May of 2033. Are we there yet? No, we're not. We have $500,000 saved up, which is pretty sweet, but we only have monthly cash flow, assuming we're withdrawing 4% of our assets. Our monthly cash flow is only $1,716, but we are well on our way. Let's see if we can switch it up here. Let's go May of 2035. Ooh, we're getting close here. That's 14 years? I can't count. 14 years here. We're at $713,000 in our account. Monthly cash flow is only $23.79, but we are very close here. I bet you one more year will do it. There we go. May of 2036. So 15 years, starting with just $50,000 in annual income, and I think that the majority of people can relate to this. A lot of people make more than $50,000, especially when you talk about households. But that's a very realistic number, and I think that if you're very intentional, you're trying to retire early and be financially independent, it's very reasonable to invest 1/3 of your income for a specific amount of time. Again, being very intentional. I know that the average Joe generally has other expenses, maybe they've got families, but if you're really intentional, you can live off of $2,750. And this is starting from zero, guys. I want you guys to remember that. We're starting with $0 here. And most people, I would say, have some money invested. Not everybody, that's fair, but we just showed you, starting with zero, we can actually build this portfolio of $835,000 in 15 years. Let's say we put 50% of the money into the total stock market and 50% into the NASDAQ. Let's see how that would result here. You can see that the NASDAQ result is a little bit lower, and that might be thinking, well, wait a minute, the NASDAQ has outperformed the total market. And you're right. The issue with this, the problem we come into is the NASDAQ goes back to 1999. So I have this data from 1999, which has two crashes in it. It has the crash, the bubble in 2000, and we also have the housing crisis in 2008. Whereas the Fidelity Total Market Fund, the data for this share of fund is only available from 2010, I believe. So we skip those. This is where some of the data is a little bit flawed. I'm just trying to be very open and transparent with you. All I can work with here is the data we actually have. Now going back here, sticking with 100% in the total stock market, let's say we actually had some money saved up in a brokerage account. Let's say we had $25,000. You can see here if we actually change the starting balance to $25,000, we actually end up with $1 million, $1.03 million, and we are able to actually retire earlier, let's say May of 2034. Not quite, almost, but I'll call that June 2034? No, let's call it December of 2034. There we go. So December 2034 versus May of 2036. And this is starting with just $25,000 in a starting investment balance versus starting with zero. Let's go ahead and switch up our annual income here. Let's get rid of our FIRE date. Let's say we have a household that has a total annual income of $120,000. Maybe two people that are working in the house. And we're able to invest 33% of our income here still. And let's say that we're very intentional, we can invest 50% of our income. I know that's not the case for everybody, but I bet you some families can actually do this, be very intentional, especially if you don't have kids. Kids cost a lot of money. And let's say our desired monthly cash flow, how much we want to be able to live off of is $5,000 a month. And let's say we're starting with an investment balance of zero to start with, okay? Can we do it in 15 years? Absolutely we can do it in 15 years. Let's look at this. We got double the cash flow, $3 million, with a 4% withdrawal rate, let's go ahead and drop this down here. Let's see how fast we can do it. Let's say May of 2031. No, not quite, not 10 years. May of 2033, yes. There we go, about May of 2032, so 11 years, we have $1.57 million, throwing out $5,257 in monthly cash flow, assuming a withdrawal rate of 4%. Now, some people join the FIRE community because they want to switch careers, right? Maybe they want to be able to live off their assets so they can then discover what they really want to do and discover their passion. So let's just assume that we don't need this money to last for the rest of our lives, but last for maybe at least 10, 15, 20 years. Let's change our withdrawal rate from 4% to 4.5%, meaning that it's less likely it'll last quite as long, but we have a higher income here, which means it's now throwing off 59.14, which means we can probably do it a year earlier. Just about, we'll call that June of 2031. There we go. So we're able to retire a year earlier. So we have 10 years of intentional investing, starting from zero, guys. And so hopefully this motivates you and makes you realize that you can accomplish so much by just starting now and being very intentional with your investments. And we're keeping it very simple here. We're just doing it into the total stock market, 100% of our money, going and living our life, being very intentional, and watching our assets accumulate to $1.33 million. And let's say we started with $50,000 here in an investment account. In that scenario, we're actually able to do it even sooner, less than 10 years here. December, maybe November of 2030. Let's call it August. Not quite. We'll call it September of 2030. We'll get us there. Yeah, definitely. $1.34 million. And less than 10 years, we're able to now stop working, live off of our assets, and go discover what we actually want to do in this life. The real point of this video, guys, is not to tell you exactly what will happen, because we're just modeling here with straight line growth. There's no way for us to really replicate real life. We could do a Monte Carlo analysis, which, by the way, if you're part of my financial planning firm here, which is launching in a few months, we'll definitely use a Monte Carlo analysis to say what are the different outcomes that could possibly happen in the future, while also taking a look at this idea of what is a goal, what do we want to really accomplish with our life, and really creating a comprehensive financial plan. And so many of you guys have already indicated a potential interest in working with me, which I'm really excited to do here in the next 60 to 90 days. So if you want more information on what that would actually look like, there's a link in the description of this video, just to make sure you kept up to date on when we launch, and you can expect to see actually a podcast series coming out to learn more about what my firm is going to be about and how it's going to benefit you. Hopefully you found some value out of this video, guys. Hopefully it really motivates you and makes you realize that you, the average Joe out there, can totally be financially independent and retire early, or just be financially independent when you want to retire in the future. It's absolutely possible. You can do it. Make sure to leave your 2 cents in the comments below. Let me know what you thought about this video, what other questions or concerns you have about the data that I used. I know that you guys have already mentioned that you want to see an inflation factor, and I just didn't have time to build it in here, but you can expect, as part of the Patreon community, I'm going to modify these spreadsheets and include an inflation factor so that you know exactly how much your money is growing in relation to inflation. Make sure to leave your 2 cents in the comments below, especially if you want to give me more feedback and what other videos you want to see in the future. I want to make videos you guys want to watch. That's all I got for you guys. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.